Okay, gang. Welcome in to the Playbook 3.0. So I am super fired up, super excited about recording this video. Off of an incredible live stream. Today is August 25th, 2025. If you missed today's live stream on YouTube, go back, check it out. It was absolutely incredible. But I'm still fired up here. I'm ready to talk. We got the Playbook 3.0 ahead of us, and it's been almost a year now. So it's been about a year and 2 months, I think, since we have last updated the playbook video. So we're going to update that video here today. You guys have asked for it a bunch in the last couple weeks, and this is going to be Clubhouse exclusive, right? So a Clubhouse only for this playbook. So congratulations, by the way, on making it into the Clubhouse and getting a chance to watch this video. I'm going to make this video very insightful, very applicable, and I will try to keep it as close to about 25 minutes as possible here. All right, so can't make any promises, but I will certainly do my best. We do have a lot to talk about. If you guys have not seen the Playbook 2.0 video, I would highly recommend going back, watching that video, just so you can hear a little bit more in depth, right? This is going to be a piggyback of that video, but I'll obviously adding some new insight and some new ideas based off of chart time and our experience over the last year or so. So let's do it. Let's go ahead and get into it. The Playbook 3.0. Let me give you a little mentality first. I always like to start off by really sharing some mentality, some mindset around having a playbook. This year has been the best trading year of my career, and a lot of that has to do with chart time, but more importantly, chart time in the same exact system. So a lot of people will system hop. They will go from one strategy to the next, but they never collect any chart time. See, it's very difficult to be a strategy hopper and actually get consistent profits because you never spend enough time in one strategy to understand the details, understand the nuances, and get the proper chart time that's needed in order to see the markets through that lens, right? So I have been trading this exact playbook, this exact system for the last 5 years now. I've got a lot of experience. I've traded the New York session every single day. I did not miss one, maybe I missed a handful of sessions over the past 5 years. Other than that, I've been trading New York session every single day, specifically on gold. And then this year, for the last 8 months now, almost 9 months, I've been trading every session. So I have tripled/quadrupled my chart time when it comes to this system right here. So I want to take the next 25 minutes to give you everything I've learned, to give it all in one video and really try and make the most of it. This is going to be a video that you're going to have to watch over and over and over again. Watching it once is good, but watching it over and over is going to be extremely helpful for you. So let's dive into it. Again, the whole mindset around the playbook is simply that. If you don't have a playbook, you have no data, right? You have no recorded data. You have no chart time. So there's no experience, right, for you to actually come up with profits, or let's say to have any sort of expectations on what you can expect in your trading business over, the next 4 or 5 years, right? If you look at mine, and sorry I have all this drawn on here, but if you look at my month to month, you will see pretty much the exact same results, right? A bunch of green and then a couple reds, right? Let's go back to July, a bunch of greens, a couple reds. Let's go to June, a bunch of greens and a couple reds. Let's go to May. May was insane. All green. April, a bunch of greens, a couple reds. March, a bunch of greens, a couple reds. Anybody else want to have results, predictable results, I should say, just like that? Well, that doesn't happen, my friends, unless you have a system that you are trading consistently month after month, year after year, without any sort of deviation to it, okay? All the best, all the top-notch traders have a playbook, they have a system, and they don't deviate. They do not cheat the system. If you had a machine, right? That every time you went up to it and pressed it, it brought you money. It spit money out of it. Would you go out and break that machine or try a different machine? Or would you just say, hey, I don't care what's going on over there, what's going on over there, I'm just going to press this button because this button is getting me the money that I need, right? So very simple. Lock in on a playbook. If it's this one, great. If it's not, then find another one and get consistent, gang. All right. So let's talk real quick about this playbook. Everything has to do with the higher time frame. So here at TTE, we're all about higher time frame, lower time frame correlation, beginning to understand where the market direction is trying to go, and we just want to go with that direction, right? So over here on the left hand side, you're going to see higher time frame, lower time frame correlation. And look, in this situation, we're going to just make bullish examples here. Okay, so let's say you have a higher time frame like the 4 hours. So just for context, right, the daily and the 4 hour are going to be where I am going to get my direction, right? Now anything lower than that, let's just say like the 1 hour, the 30-minute, or the 15-minute is where I am going to look for setups and entries, right? If we look over here left, setups and entries, okay? I'm going to look for those on these lower time frames, like the 1 hour, 30-minute, 15-minute, and I'm going to base those setups and entries based off of the information I get from the daily and the 4 hour, kind of showing me the direction that I want to go into, okay? So always line up your setups with the higher time frame, lower time frame stuff here. Okay, so let's get into the playbook a little bit. Now that we know higher time frame, lower time frame correlation is extremely important, let's jump into the playbook here. Okay, lovely. So now that we have the setups drawn out, I figured I'd save your your time on that. Now that we have the setups drawn out, let's talk about them, right? So let's focus first on the breakout. So again, I don't want to repeat a lot of the same stuff from the 3.0 video, but keep in mind my playbook started out a bunch of different plays, and I had about 7 or 8 plays, and I very quickly narrowed it down to 3, right? So first and foremost, I want to talk about 3 trades that really made me most of my money in my career up into this point. And they were really these 3 positions right here. So the first 3, the breakout, the onion, and the celery play, right? 1, 2, and 3. And for any new trader here, so if you're a beginner in this system or if you're a new trader, I really want you guys to focus on these 3 positions right here and these 3 only for now, because this is really where you're going to build your foundation, right? These other trades over here are very good, very profitable, but they do take a little bit more experience, and you will gain that experience. But in the meantime, you can really start to qualify good trades, to look for good setups based off of 1, 2, and 3. Okay, so all my new traders pay close attention to these 3 plays right here, and then we'll dive into more of like the impulse entries and kind of the counter trend stuff. Okay, so first is the breakout, right? So very simple position. It's self-explanatory. There's going to be a time where price is ranging, right? So if you look here in this box here, when we're talking about the breakout, you'll notice how you got price just ranging, right? It's just kind of moving up and down, doesn't really know where it wants to go, and it's just, moving sideways, right? So we are going to look to the higher time frame, right, to get our lower time frame correlation here. So again, if we're using a bullish bias here, then we are going to be looking for buys, right? So what we're anticipating, again, if this is up here on the top left here, let me just make sure this is understandable here. You have the 4-hour time frame. So 4-hour time frame is up here. So what we're going to be looking for is we're going to look for buys on this day, right? So we're expecting the next 4 hour to make a lower wick, right, and then begin to push up and fill that range there, that wick, and then that range, right? So that's our goal. So that's what we're anticipating. But what's happening is it's just consolidating. So that means that the 4 hours just flip-flopping, right? going back and forth from bullish to bearish, not really able to do much, just kind of trying to make a move, right? So as we see this, one thing we're not going to do is we are not going to take sells here. So real quick, let me just talk about avoiding fake outs. So a lot of people always ask, Nick, how do you avoid fake outs? How do you do it so well? You always seem to know where the fake out's going to happen. And it's very simple. It's not that I'm a magician or a genius or anything like that. It's just I can see where the higher time frame wants to go, right? So if you get a bearish breakout here and the higher time frame is bullish, most likely that's going to lead to a fake out, because you see this wick down here, that most likely would be the bottom wick for the new 4-hour candle. And then what will tend to happen is price will move back up in the range and then eventually begin to close outside of it, right? And at that point now, this 4-hour candle is starting to break its own high and it's getting ready to go, right? So we want to be a part of that move as it continues moving bullish, right? So what we're going to be doing is we are not going to take this sell, this false breakout, right? This bearish breakout here, we are not going to take that. We are going to avoid that sell with our bullish bias here, and we are going to wait for a bullish breakout, right? So now let's say there's all clean range to the left hand side. This is where we want to take our trade now. So all we're doing is we're lining up the higher time frame with the lower time frame. In this case, you're going to have a bullish, right? A bullish higher time frame with the 4-hour. And now we're going to come down here. We're going to look for that breakout. So we're going to wait for price to consolidate here. We're not going to touch the breakout in the opposite direction, right? Opposite of bullish is bearish. So we're going to let that one go. And then we are going to wait for this breakout right there. So once that breakout happens, that now becomes our confirmation candle. So as we have that confirmation candle, which again is this one right here, let me get rid of the yellow box. Now we are ready to set our buy stop, right? So all we're going to do now is we're going to wait for our lower wick. That current candle right here, again, this is going to be our confirmation candle, and then our trading candle is going to be the next candle that ultimately makes a lower wick and then starts to move bullish, and that is our trade right there. So we're not going to talk much about trade management here, but that is the breakout, right? You're lining up the higher time frame direction with the lower time frame market structure. You're not going to take a breakout that goes in the opposite direction. You're going to wait for candles to close in the direction that you have your bias in, and then that's going to be the move, right? Confirmation candle right here, and then trading candle right there. So that is simple, very simple breakout position. If we pull up TradeZella here, let's go over to the playbook, because we're going to bring this playbook in a little bit today, and we will see that the breakout position, which is right here, so far in 2025 has a 78% win rate, over 50 trades. The average trade time of the breakout is about 10 minutes, and it's actually got a 3R. Wow. I think it's got like a 3R here. So the breakout works really well, 75 to 78% of the time. And this is certainly one where if you're going with the higher time frame direction and you have the confirmation, it's one that you have to execute on, and you know it's going to be good for about 7 out of 10 trades. You'll be able to find a winner on there. So make sure you're doing it properly, and then don't hesitate to execute anytime you see that playbook breakout setup during the high times of volume, during the opportunities where the higher time frame wants to move, right? This is your time to get in there. So I have to preference as well, all these trades are best taken during high times of volume. So when are the high times of volume? You have London session. London open is 3 a.m. Eastern. You have pre-New York, which is a little bit before NY open. I'd say basically the time that we're in the clubhouse, so like 6 to like 7 a.m. Eastern. Right? Those are good times of volume. You have the New York session, which is going to be, you know, my favorite time is probably between 8 a.m. and 10:30 a.m. It's going to be the bigger session of them. Ideally 8:30, 9:30, those are going to be the bigger volume times. And then you're going to have Asian session, which we trade as well here, obviously. And then, you know, any time between like 9 and 10 p.m. is typically going to be the best time to look for these type of trades. And the cool part about it is if you're a new trader, we are live for all of those times. So the reason we live stream during those times is because those are going to be the best times for our playbook to show up. Remember, a playbook is collected data that you can have a win rate or expectation on. So we have collected data for many years now, and these are the times that tend to play out the best when it comes to taking these setups. So that's a little bit about volume time. Now let's move into the onion play, gang, because look at the smile. This just brings a smile to my face. The onion play has been a phenomenal setup, not only this year but in the years prior. But this year it's really taken a tone, and taking a turn for the better. And I truly believe it's because we have this higher time frame, lower time frame correlation just so dialed in at this point, right? So let's open up the playbook stats here. And this will actually blow your mind. So forgive me for like this, stuff in the way here, but you have the onion play here. This onion play has out of 103 trades this year, it has a 90% win rate. 90% win rate, gang, over 100 trades. The average trade time is about 8 minutes, and the profit factor and all that is really good too. So let's talk about the onion play. And this is a play, this is my favorite position to take, by the way. So anytime this shows up, I am in there like swimwear, right? So let's keep in mind the 4 hour here. We have a bullish bias here on the 4 hour, and let's do the same thing. Let's just pretend we're in this scenario where you have the 4 hour candle kind of getting ready to move bullish, and we want to look to take buys here during our session. Now, if we get to the desk, right, and this is what price looks like, do we just want to blindly take a buy here? I don't think so, right? Especially if like our nearest support, let's just say, is somewhere down here. We don't want to take that buy. So what the onion is the onion is a break and retest almost, like a small minor pullback for price to continue moving in the higher time frame direction. So what we're going to do is we are going to wait here, okay? So let's redraw this 4 hour candle. And let's pretend that this one hasn't opened yet. So all we have is this one, and this candle is about to close right now. So let's say, boom, the candle closes. And it looks just like that. So you see this lower wick from here to here? That's going to be your lower wick from here to here, right? Now you see this upper wick from here to here? That's going to be this upper wick from here to there, okay? Following? So now that we have that 4 hour candle closed, we're going to now wait for the other one. And look, we closed strong bullish. So we very rarely want to take sells, right? Especially if the 4 hour time frame still has a target, let's just say up here, that it's trying to get to. So what we want to do is we want to expect now that this 4 hour candle would make a lower wick here, right? AKA a push down, something like this, right, on the 4 hour before flipping back up and breaking highs and going bullish, right? So how are we going to anticipate that on the lower time frame? We are going to look at that and we're going to say, okay, cool. 4 hour candle is going to most likely make a lower wick here. So let's wait for the lower wick to be made. So let's say now this candle drives down, right? It creates a lower wick on the 4 hour candle, and that candle now closes. So all we're doing at this point now is we are anticipating that this candle is going to get ready now after making a low to begin to move back up and start to move bullish, maybe come into that overall target there, right? So what we're going to do now is this is where we're going to wait, and we are going to wait for a strong support. And when you have a strong support formed, what you're now looking at is the fact that this previous bearish candle had came down for one reason and one reason only. And it was to make that lower wick right there on the 4 hour. So now if we are beginning to create this support here and closing with that bullish candle, that means that this 4 hour candle now has came back up and potentially ready to flip bullish, break the highs, and continue moving up, right? So this is where we are looking at high volume time. We get that support right there. We have the higher time frame direction, which is up. We wait for a lower wick, right? And then we execute on this candle right here. And I want you to pay attention as we move up, right? And we come right into this wick. this is where you want to snag profits, because what's ultimately happening is this 4-hour candle is moving up and it's filling that wick. You see that wick right there? Again, we know that that high is that high, right? So it's filling the wick. So again, we have clean traffic, or we have higher time frame direction for our bias. We have clean traffic on the left on the lower time frame. We have a high volume time. We know that during high times of volume, wicks will tend to get filled, right? So we're going to fill that wick on the 4-hour. And then we also know during high times of volume, ranges are going to get filled. And that's where we begin to fill that range there. So again, as you put all that together, this now becomes your confirmation candle, this bullish one down here, and then this guy becomes your trading candle. So very, very simple. Put the higher time frame bias together, know what you're looking for, which direction you're going to go. You wait for that support to be formed. That's your confirmation candle. And then this guy right here becomes your trading candle. And again, typically 9 out of 10 times that trade is going to work really well. Okay, so that is the onion play. Study that play. If you just took this position and this position only for the rest of your life, you would do extremely well. I think this year alone, can you see how much money it's made? Yeah. Let's see, how much money has this position made here? $88,000 this year this position has made. So can you use an extra $88,000 this year? Lock in on the onion play, right? Lock in on the onion, make sure you get it right, and that way when it comes, you'll be there for it. All right, so let's move on here and let's go over to the celery play. So celery play is a very simple position. A lot of times, just like the breakout. So remember we were talking about the celery. Remember we were talking about the breakout here, how you have price typically ranging for a little bit. You get that candle to break outside of the range. That's your confirmation candle. And then this is your trading candle, right? So just like the breakout, the celery is very similar, right? Let's say we get a closure outside of the range. So candles close outside of the range. And what would that be considered? That would be considered our confirmation candle, right? For a breakout. Yes, correct. So let's say now we're looking to get into this breakout and we have a buy stop set, right? So let's say we have our buy stop set for, in this situation, the break of the highs, but this is a 15-minute candle, and for some reason the first let's say we're 12 minutes into this 15-minute candle and it's still not breaking the highs. So typically what I will do is I will delete my buy stop order. I'll wait for this candle to close. And if this candle closes below the range, then there's no trade, right? But if this candle decides to come back up, right, and close back above that range, I will, obviously I deleted the buy stop, but that's where I will re-add my buy stop. So I will re-add this buy stop, and this is what we call the celery play. So a lot of times the celery play is going to basically come by default. It's going to fall into your lap. It's going to be a position where you are ready to take a breakout, but because the breakout took a little bit too long to unfold and unravel and come together, you settle now for a celery play. And again, the celery play will typically have a little bit of a higher win rate than the breakout. So anytime we can get this, we like it. So the big thing here, a couple big things, it's all about where the candle closes, right? So although this candle is closing bearish, notice that it's closing above the range still, right? You're still getting that candle to close above the range. Therefore, if the 4-hour time frame is bullish, our bias is bullish, and that means anything that remains above that zone, we still have a bullish bias for, right? So two things you can do here. Number one, you can let price kind of create a new support and then take a buy off of that. But if there's high volume coming in, let's say like London Open, New York Open, New York Stock Exchange Open, right? I will take an impulse trade. So I won't wait for a candle to close in my direction. I will take it as it breaks this high. So let's say it makes a little lower wick. It starts moving up. It breaks the high. That's my entry for the celery play. And yeah, then we're going to continue to let that trade run and just, trade our plan. So Very simple, quick little breakdown again. This is a breakout. You're waiting for you to get yourself to get entered. If price takes a little bit too long to kind of unwind and get that breakout going, you delete it, you wait for the next candle. If the candle closes back above this ultimate overall range here, the buys remain in play, and that's where you can take an impulse entry on the break of that high for price to continue moving bullish. So that is the celery play. This is the confirmation candle right here. Boom. And then this is your